Well, first of all, so now that everybody can hear me, welcome everybody. It's a great opportunity to be here in front of you and talk. A little bit about myself. I'm a CPA. My practice is in Prior Lake. I've been there for 5 years, and before that I had a practice in Rochester, Minnesota. So I moved up here about 10 years ago, and in between I was a county auditor for a small county in southwest Minnesota, Martin County. So that kind of gives you an idea. And my clients are similar to yourselves. They're small business people. They're individuals. We do tax work. We do planning. We do accounting. And we do payrolls for different companies. So we do a diverse a number of activities for businesses and individuals. So today what I'm going to go over is we're going to talk a little bit about budgeting. We've got our overview. Basically, we're going to talk about what is a budget, what does it take to create a budget, and why do we budget. And then we're going to talk about the budget concept, and we're going to talk about the budget process. So let's start with what is a budget? And if you think about it, every one of you probably budgets every month. When a person gets paid, before they get paid and before they can get paid again, they've got expenses. So they have to do some planning and they have to do some budgeting. So everybody does that at some point. Budgeting is merely forecasting. Budgeting is like a pool of money, and forecasting is taking that money over a period of time. Now you ask yourself, you know what a budget is, you ask yourself, why do you budget? There are several reasons why you budget. One is it enhances your success. If you think about the larger companies, you think about the Fortune 500 companies, they didn't get where they're at without budgeting. It allows you to perceive and correct problems before they happen. The primary benefit of using a budget is to monitor and evaluate where it's at as you go. So you don't just take your budget and take your audited statements or your tax return and slip it in your desk and give it to your accountant a year later. That's not budgeting, because that information becomes historical. So you want to be able to use your information. You want to be able to make changes as you go, and your budget is more proactive and not reactive. Your budget will indicate how much cash you need. It'll indicate how much money you need to produce the income that you want and the expenses that you have. That's the importance of a budget. It builds morale. Now, you'd never think it would, but I mean, if you think about it a little while, if you basically say to yourself, well, I've got cash in the bank and the phone keeps ringing, everything's fine. Well, that's not necessarily true. You need to monitor it. You need to be able to take and determine, get organized, and it helps motivate employees. That's some of the value of having a budget. Convince your lender. Lenders look at people and businesses that are organized, and it gains credibility. If they know that you're on track and they know that you know what you're doing, then they're with you. They're more apt to give you a loan. They're more apt to extend a loan if they have to. So that's all important, and that's the reasons why you budget. Now you look at when you budget. Most budgets are on an annual basis. In other words, you take your budget, determine what you're going to need for that period of time. But at the same time, you have to remember you need to monitor. You need to keep track. You need to see if you have to tweak your budget, and you have to see if there's any problems. One of the other benefits is not just every, say, 3 months or every month you look at your budget, but if you're looking at your budget and it's off, there's two things that could happen. Number one, there could be a mistake, or there could be an error in putting together the numbers. And number two, it could be technically maybe your sales are down or your costs are too high. This is the time that you can make that adjustment to your budget. So it is valuable, and monitoring is important, and being flexible. How do you use your budget? Your budget is a tool. Your budget is an operating tool. It tells you where you've been, and it gives you a guide to where you're going. It's like, would anybody ever go anywhere and drive down the road without a road map? Maybe you did if you came here? No. So, so it is important. It does develop a road map and where you're going. Controls. It controls your cash. It determines, you look at it on a regular basis, on a routine basis, whether it's every month, whether it's every quarter. You're constantly looking at that and determining, do I have to make any adjustments? Now, as you go, one of the things that happens is as you're moving along and you're going along with your budget, and you have to make an adjustment, there's only three things that you can adjust. Number one, your sales. You can either have more sales, and if your sales are down, maybe you have to sit and ask yourself, well, what can I do to increase sales? Is there something that complements my business? Now, to give you an idea, I had a client come to me this last winter that was in the manufacturing business. And he said to me, he says, we have to do something. We have all those trucks. Those trucks are parked out there, and nobody's driving them. And not only that, but I'm laying off my drivers, and I don't know if I'm going to get my drivers back. So the thing is, he said, well, I'm going to start another business. I'm going to start a trucking business. And then I'm going to take those trucks, I'm going to buy a couple extra trucks, and I'm going to lease those trucks to my business. So those are the things you have to look at to generate more revenues. The other area is, the second area is spending. Maybe you have to make spending cuts. Maybe what you have to do is buy less expensive furniture, for example. And unfortunately, maybe you have to cut some of your costs, maybe cut labor costs. And finally, the last part of adjustment you can do when you're looking at your budget and it's out of whack is you need to look at profits. Maybe your profit isn't realistic. Means of communication. Your budget is a communication. If you've got more than one location, if you've got more than one department, it's a way to communicate with your different staff or your different departments. Cash flow. It certainly watches your cash flow. So say, for example, if you had to go out and buy some equipment, if you have to go out and buy some equipment, somehow you got to pay for the equipment. Now, to give you an idea, another example, I had a woman come to me just last week, of all things. How ironic. And she came to me and she says, I'm going to buy a medical practice. Now, it kind of like, Rick, I have some people come in after the fact and some people come in. And I says, well, that's great. I says, you're going to buy a medical practice. And she says, well, she says, Steve, she said to me, she says, first of all, I got to know how I'm going to pay for it. I got to pay the loan back. And you know the other thing she said? And she said to me, she said, Steve, I got to get paid. Those are the things. You have to get paid. If you're going to start a business or if you're going to set up a budget, you need to pay yourself first. Now this person, actually, we sat down, and what I did with her, I sat down and I says, okay, well, we can make this work. She had all these papers. She had tax returns. She had contracts. She had financial statements. She says, well, this is on a cash basis. I said, okay, well, I understand that. So we looked at the tax return, looked at the financial statements, tried to extrapolate how much of that was in the sales was from receivables and what the receivables were at. Because she also said, well, I have to buy the receivables. So we sit, and what I did is I made a list. I made a laundry list for it, and I said, now what you got to do is you got to take this information and you need to go back to the people and say, find out, get these questions answered. She said, first of all, one of the questions was, why is she selling? And that was a question. I said, why is she selling? Well, she's been in business for 30 years. Well, why would you sell? Probably maybe you're going to retire. Maybe you're sick. Maybe they're going to redirect a road in front of your building, and maybe you're going to get life. So you don't know. So what she did is she took all this information, took all these notes, and she went back to, it was out of state, she went to another state, and now she's going to bring back that information before we go any further. So there's some things that have to be done, some homework that has to be done ahead of time when you're talking about starting a new venture or extending and figuring out your budget. Budget concept, the three basic budget concepts, we talked a little bit about them, the sales. The sales is very important, the total cost, and then the bottom line, which is your profit. Now some businesses start at the bottom. They start at the profit and they build their budget going up. Now, I caution people to do that because when you do that, you might be unrealistic when you get to the top. You need to make sure that your budget is realistic, your sales are realistic, and that you can actually achieve the sales goals that you set up. What I've got here is I have taken one of my clients is in the dental, is a dentist, and I put together how a budget looks. And basically the three components are here. I don't know if you can see it real well, but the top section is sales, cost of sales, general administrating costs, and then the bottom line, which is a net profit. So that's basically how we set it up. We set it up comparing it. You compare it to your actual figures against your budgeted figures, and you come up with a variance. And that's what you're going to be monitoring on a regular basis. I also did a comparison here of the actual sales to industry standards. Now that kind of helps keep your budget in line. It compares yourself. It's, say for example, your advertising expenses are 10%, but the industry standards for you are 20. Are you going to achieve your goals? And so what you want to do is you want to put together not just your budget, not just your actual figures, but do some comparisons to make sure that your budget is intact and makes sense. Some of the budget indicators are you need cash, the cash requirements for raw materials, labor, your total startup costs, and your day-to-day operations, as well as your revenue needing to support your business operations. And then, of course, your expected profits. Now, last is the budget process. The budget process is several steps. Basically, is setting an objective. What do you want to do? Where do you want to buy equipment? Do you want to expand? Do you want to add another location? I mean, this is the objectives you set up front for your budget. You determine your available resources. How much cash do you have? But it goes beyond that. Maybe you don't have enough cash. Maybe you're going to have to take out a loan. Maybe you're going to get investors. All those are important to determine your cash needs. You're projecting your future needs. If you were to buy a piece of equipment that was going to be extended over, say, 5 years, how are you going to pay for it? That's part of the process. You match funds needed in the future with available resources. You obtain a final approval. Now, some of you are small businesses, but some of you probably have maybe multiple sites. Maybe you have multiple owners. But somehow there may be an approval process there. And then if you do have a larger organization, you'll have to distribute those funds from the budget. And then the last but not least is monitoring and evaluating. And I can't express that enough because it isn't about how much is in the bank, and it isn't about how much the phone rings. It's a process that you have to do, and you have to evaluate it on some kind of an ongoing basis. Now, smaller organizations probably can get by with doing it every quarter. Now, the nice part about that is, say for example, your business does quite well, and your sales are booming, and all of a sudden you have double the profits that you expected. So you look in the first quarter, you look at that. There's a key time for you to adjust your taxes. Because if you look at when you're setting up your budget, most of you in this room, I would imagine, are some type of a pass-through entity or an LLC, like an S-corp or a partnership or something like that. So there's never any taxes figured in. So what you have to do is you have to basically look at that number and then say to yourself, okay, now I've got to have some of that set aside to pay the taxes. And that you have to budget for too. Failing to plan can be devastating. You have to know your market. You have to plan to make money for yourself. You need to be realistic with your plan. And if you got to know what you don't know. And if you don't know what you're doing, then maybe you got to get someone else to help you. Find a CPA out there that'll help you because there's nothing worse than waiting till the end and finding out that you've got a problem. In fact, I can tell you an experience. I had someone referred me to a new business. They were in the retail business. They were in the clothing business, of all business to get into. Now, you know how the clothing business is. They've been in business not quite a year. And the owner of the business had a 6-figure income. 6 figures before going into this business. went into the business, and now it hasn't even been a year. Sales didn't accumulate the way they planned, and they got lucky because the landlord gave them a 5-year lease and gave them a break for the first year. Now sales are going down and costs are going up, 6-figure income. She couldn't make it on the business, so what she did is she went to work for someone else. The family runs the business, but now she's driving 20 to 25 miles commuting, and the business is sinking. So you want to be careful. You want to have your budget done. You want to have your plan to succeed. Marketing, budgeting, and planning. You want to be smart. You want to have a specific, you want it to be measurable, you want an attainable budget, you want it to be relevant, and you want it to be at time bound, how long it's going to take you to do your project. And then you can go smooth sailing. So let's just summarize kind of what we talked about a little bit. We talked about what a budget is. We talked about why we need a budget. We talked about how to use a budget. We talked about the basic budget concept. We talked about sales. We talked about total cost. And we talked about profits. And then we talked about the budget process. So that's kind of what my section is on budgeting. And now what I'd like to do is I'd like to take and entertain any questions anybody might have. Feeling budgeting? Yes.
Where would you go to determine industry standards, let's say the cost or budget or anything like that you mentioned before?
Yeah, industry standards. He asked where you go to get industry standards. One of the Cadillac out there is Robert Morris and Associates, and I think you can probably maybe get it at libraries or maybe online. But Robert Morris does have all the statistics, and they do it, and Robert Morris breaks it down by asset totals, and they break it down by sales volume. And for this example that I used, this was broken down. This comparison was broken down by sales volume less than $1 million, because this particular dentist was under that threshold. So, yes.
Just out of comment, if you want to get with me, I have some information in my notes back. I'm unrelated to that, but I can tell you there are some benchmarking firms. One is free, others cost a little bit of money, but it identifies the industry and will give you some good figures. And I can email it to you.
Yeah, that'd be fantastic.
Anyone else have any questions about budgeting or the process? Or yes?
How do you create a budget for a small business that's just starting up and there's really no forecast or anything like that?
How do you budget for a business that's starting with no past history?
Right.
Well, basically you're starting with your sales figure, and you're going to have to determine what your market share is going to be. You're going to look at your competition. That's kind of where you're starting. But you have to be realistic, and you have to be conservative to start.
Well, to elaborate on that too, if you're starting out brand spanking new, you need to start jotting down what potential expenses are. So it's approaching it the other way, not just looking at your sales, but what's it going to cost me to go into business. I think what I've seen, just what I do, I do financial advisory, I work with a lot of business owners, and I see them looking at the profit side, but not really paying enough attention to what am I spending. So I think that would be a very good spot, is to start organizing what's going to cost me to be in business. Then it also starts giving you your goals for what do I need to earn to at least break even. It's when you're factoring in what do I need for my monthly expenses to pay my house bill, electric, that has to be factored in there too. So let's say don't overcomplicate it, take the basics, lay that out, and that'll actually set the framework up to work with CPA too.
And when you're doing that, and when you're starting with your profits, like you were saying, one of the constraints you have, if you're not in business, you don't have a track record to go by. That's one of the problems. You don't have anything to compare to. You can't say, well, my sales are going to go up 4%. You don't have anything to compare to. So, yes.
I'm not very savvy with Excel, and I have QuickBooks, so I'm always checking all the free reports through QuickBooks. But is there a good software that you would recommend that when you're doing your budget, you could put in each of your, without knowing how to do a lot of formulas yourself in Excel?
The question was, is she has Excel, she uses Excel, but she also has QuickBooks, and somehow they've got to be integrated?
No, I'm not good with Excel. I'm wondering if there's a relatively inexpensive software out there that you would recommend a small business buying to help with the process of creating that budget. So basically you can have the 12 months and you can say, well, this is a fixed expense, this is one that's gonna go up along with my sales. And just something to help with that process if you're not good at creating formulas in Excel yourself.
Okay. Well, I guess I don't know if anybody else is familiar. I'm not familiar with, most people do an Excel and they do a what if on your Excel. But what they do then is you take that and you put that right into your QuickBooks. Because QuickBooks does give you the capability to create budgets. So you can put your budget actual in QuickBooks.
Well, let me jump in and toss a question out. To work with a CPA for a fledgling business, not necessarily pushing yourself, but any CPA, is that really cost prohibitive, or is that a good place to start? And can somebody spend a few hours and actually get put in the right direction?
Usually what happens when, especially you're starting and you're looking at budget, it can get expensive. So you need to be able to yourself take on some of that responsibility if that's the case. But you always have some upfront costs. You always have that learning, and you need to find a CPA that if you want to take it on, that'll let you do that. Some business owners don't want to do that. It's that know what you don't know type of thing. So, but people that do, it works fine if they're willing to take that on.
On that, I don't know if a lot of people are familiar with SCORE, which is through the Small Business Administration. We already pay taxes for it, and it's usually retired executives from all different industries, and it's there for you, and it's free, and they help you with budgeting and just help you along the way.
I actually used that years ago myself, and it was pretty enlightening. Some very good people to sit down with.
Can we just hear that again, please?
Well, she was talking about SCORE.
Oh, SCORE, okay.
Yeah, and SCORE also offers services for budgeting and helping businesses get started, and you don't pay for it because it's paid with government money. Yeah, all right. Anybody else have any questions or any other questions? Okay, thank you.
You've got two of you.
No.